Hey everybody, this is Lisa Hill with Mortgage Monday with Patrick Lewis. And today we're going to talk about buyer expectations. And by that I mean what they expect, like mortgage payment and things like that. So Patrick, I'm going to turn it over to you and you can tell us what you think about buyer expectation.
Hey, great. Thanks for having me again. I think it's a pretty relevant and good topic today. You and I had discussed before, kind of what was going on out there. And what I'm noticing a lot lately is, buyers have been out there maybe kind of looking around for maybe the last year. Maybe they dabbled the last year and a half. Maybe they haven't. But what I find a lot is buyers don't really know how to equate a sales price to a monthly payment. Sometimes they see random payments on Zillow to a property they see. I've noticed, the hazard insurance is low, the taxes are low. Sometimes there's not an HOA in there. You have to be very careful on what you read online on payments. But what we're seeing, I think you could agree, we're seeing a lot of people coming out looking at properties and being shocked at what their monthly payment is.
Yeah.
You might have thought. Interest rates have increased, and sales prices have increased, and you're not getting as much for the monthly payment as you used to. Let's just say when rates were in the 3s to the low 4%, and we're seeing a lot of that.
Right. And I know when I have my buyer consultation, I have people saying to me, well, we don't want a payment, any more than $800 to $1,000. And quite honestly, that's really unrealistic. Yet it's really hard to keep your payment that low. So you as a lender,
Right.
you kind of throw the ball back in your court.
Mm-hmm.
And hopefully between the two of us, we can explain it, because there's a lot of people out there that still think that they can get a payment of, $800 a month.
Well, that's true. A lot of first-time home buyers I talk to and come in. I guess if your average rent in the greater Orlando area is $1,300 to $1,400 a month and increasing, it seems to be the golden payment amount is $1,200 to $1,300. It has been for a while. Buyers want $1,200 to $1,300 a month. And that might have been fine a year, maybe 2 years ago, with the combined lower interest rates and lower sales prices. But now they're finding that, a lot of times they come in and think you can get a whole house payment lower than your rent, which is relative, what can be true if you put a lot of money down.
Right.
Putting the minimum down, an FHA loan at 3.5% or a conventional loan at 3 to 5%, your loan amounts are getting up there. So the same buyers that came in looking for, $800, $900 a month, that would be awesome, or even $1,100, $1,200 a month, they're finding they're not getting much for it.
That's right.
They're not getting as much for it. Let's just say ballpark, that kind of a payment, you're looking at the mid 100s possibly, depending on your rate and your credit score and so forth, where they were expecting to be able to buy more. Or they come in and they see a house that they really, really like at 180 to 200,000 and don't realize that's going to carry maybe a higher payment than their rent or a higher payment than what they thought, because of the increased price and increase in interest rates. Now, another factor is, they're out there. So let's just not say they're not out there. The
Right.
prices are out there, but then they come back and say, well, that's, this more than me. That's not how, there's too much work, or there's too many things that we don't like about it. So there has to be some sort of compromise now with the, everything inflated, to get into a home. If not, they're going to have to realize, and through time here, they're going to have to pay more per month than if they qualify for it.
And I know right now I'm working with first-time home buyers, and unfortunately they don't really qualify for much more than the house that we just found for them. And the problem that we had was, they're FHA buyers, so we had to be careful about the condition of the house. And
Right.
You just said it. We found one that they fell in love with, and it was in their price range. However, when I called the agent, there's no way it would go FHA financing. There was wood damage everywhere, leaky roof, all kinds of issues. There was a problem with the fireplace, so we know that those will not go FHA. And unfortunately, me as a realtor, there's no way for me to filter those properties out. So anything that's in the lower price range, typically they're going to need a lot of work.
Right. I mean, bottom line is it's harder to qualify for some of those average properties that are higher priced now. Average properties might have been easier to qualify for, but now they're not. So your average property, when you're climbing up in the sales price ranks, either, they don't, a lot of times they don't qualify for it now.
Right.
They can qualify for it. It's not the house that they want, but there's really not that many options. So I think compromise is a big thing. I think when we're talking about expectations, how you started this off is, I think the expectations need to be adjusted a little, that, hey, we're not going to get as much as we thought with our monthly payments. So we either have to come in with, we have to agree to pay a couple more $100 a month if they can qualify for it, or they're going to have to compromise on some of the features.
Well, let me just ask you about this, Patrick. I know that I get questioned all the time about like the 203K loan, which is the FHA renovation loan.
Yes.
Now, I do know that aren't the fees a little higher, the interest rates a little higher or something on that, and we have to get estimates from an FHA approved contractor. Is that correct?
Yeah, I think it all depends on the situation for rate and payment and so forth. But the 203K is a rehabilitation loan. So if you do find those buyers find those lower sales prices, that's the payment that they want, but there's lots of work, and we're talking about not really cosmetic and changing out the carpet and maybe changing a countertop.
It has to be major stuff.
Well, yeah, these are something that they have to improve.
Right.
The kitchen's functional, but just no way are they going to live in the kitchen like this. So those loans are available. They do take some time. You do have to get a contractor. You have to get the bids. You have to get the plans drawn out. The appraisal is based on, the proposed improvements and so forth. You do close up front, and you do get draws, and the lender issues draws throughout that process of certain milestones that are hit for construction. I personally don't do those. There are lenders out there, and there are specialists that do. It's a good option if you have the time, have the patience.
Yeah. And if I'm not
go through the steps.
Well, if I'm not mistaken, I think too, isn't there a max at the cost of renovation that they allow?
Yeah, it's the FHA loan limit. I don't even know the exact. Like I said, I don't do them, but you do have to stay under certain parameters. And once you make your plans and specs and so forth, you really can't change them. Remember, you funded the loan up front.
Right.
So draws are issued to work done exactly to the plans that were done up front. So you have to be pretty certain on what you want to do. And I would just suggest, if you're going to go the 203K route or the special or the rehabilitation route, like I said, if you have the patience and have the time, I absolutely would go to a lender that specializes in it.
Right. Yeah. I've only done probably a couple in my career. Not very many, but I do know that there were certain, guidelines and things that we had to go by, and it did take more time to get it approved.
I mean, they're not for everybody, but there's lenders out there that do well and specialize in them.
Yeah. Awesome.
To me, that's the extreme. If you just can't find anything, you just can't afford, personally afford it or qualify for it, that may be the option.
Right.
And some people do that because there are just certain areas and certain places that they want to live.
Yeah.
Expectation-wise, as we're talking, talk to your loan professional, talk to your realtor about, when I qualify people, pre-qualify them, I start backwards. I start with the monthly payment. Monthly payment you want to stay around, and what you're budgeted for. So they usually throw a number out that's less than their rent. And not less than your rent, okay, because it's really, really hard to do. But I ask where they're budgeted for. Look, I don't get paid on their monthly payment or anything, so it's not a catch question like going in and buying a car, okay? It's tell me what you're comfortable with, and then we'll back into a sales price instead of telling me, so what do you want? Well, I want 3 bedrooms, and I want it walking distance to here and here and here, and we're looking around $240. Okay, do you realize that your payment's going to be X on $240? Or they go through the process and you'll spend 2 weeks looking and realize that maybe they can qualify for it, but no way in the world they want to make that kind of payment. Or maybe they don't qualify for it, but they don't know. And you've just wasted your time, and we've just broken their heart.
Well, and something else, those that can qualify for a higher amount, but they just choose not to.
Right.
Once we get out and start looking at properties that are in their range and they see what the lower range is, most of them will say, let's go higher, because the amount that the payment goes up isn't that great.
Right.
And find that they can get a better house at, a higher price.
Right.
So as long as they can qualify and, they're okay with that, then,
yeah. I usually say, what are you comfortable with your payment? And then I'll throw a max payment out there that they qualify for so they know their range.
Right.
At times they have to go up a little bit higher than what they're anticipating. Remember, that's just a starting point when I get to them and we talk to them about it. But the further out you go, it seems like you can get more home.
You're right.
Like I said, there needs to be a compromise. If they move further out, they may get a much better, bigger, or more remodeled home. It may be something more for their price range.
That's it.
Well, that's a big compromise, is location. Okay, it's a big compromise.
Yeah.
Number of bedrooms may not be a compromise, but the kitchen being remodeled may be a compromise item. I think my point is there has to be more of a compromise to find the home that you're looking for if you can find it at that price range. Otherwise, everything's just more.
Yeah. Well, I do know that we had the situation just this weekend with our buyer, and unfortunately, we had to go all the way to Osteen in order to find them a property that they could qualify for, and we just got lucky on this one. I mean.
Right.
The lower end properties aren't out there like they used to be, and so.
Yeah.
I really think that it's just really important for, if you're a potential buyer, sit down with your realtor, sit down with your mortgage professional, and let's, figure out what is the best thing for you. And,
right.
And sometimes, Patrick, you even have some ideas or suggestions that can help someone.
Right. It doesn't matter what the price range is. I mean, we're talking is an example of a first-time home buyer because it seems to come up more often with them. But even all the way up to the high end, we have people that don't really care about the monthly payment so much, between $400 or $500 a month, but really, really want to minimize their money to come down for closing. Like I have one now, we split the loan up into a first and a second, and we borrowed more of the down payment so they could come in with less. The payment was okay with him.
Right.
Some people don't want the high payment, so they're willing to come in with a lot more money down. So these are puzzles that you put together to fit really what they're looking for. And you just give them a couple options, maybe in the beginning, give them a range, and then they can kind of narrow down from there.
Right.
That's also expectations. So a lot of, by the time they come to me, like yours, for example, they came to me, they told me their goals, they told me their payment, said, where are you willing to budge? We're not, this is what we want. We're willing to move a little bit. We're willing to keep our options open. And I told you the monthly payment that they really wanted to stay at. And you immediately said, oh, okay, we got to go 20 miles out.
Yeah.
Or whatever. They kind of wanted a little bit more land. So it actually worked out. But as a realtor, if you hear $800 to $1,100 payment a month, that's what my buyer wants. It's like, whoa, it's going to be a real big journey to find them that house. If it's appraisable, if it's in the quality and condition, and if it's even close to what they want, you know what I mean? So,
well, and I know that even rents, it's really, really difficult to find anything that's $1,000 or less in rent, because rents are really high right now. We kind of had a conversation about that earlier, and what we think is going to happen in the future. We know that they're building a ton of apartments in Orlando right now.
The market's going through a shift. I think there's so many apartments that it's going to have to drive the price of rent down, the cost of rent down.
Yeah, yeah.
But it's just really, really important to know what you're looking at, because Orlando and Greater Orlando is not super cheap to live in anymore. Residential housing wise, it's not cheap to live in anymore. It's not. It's becoming very expensive, and buyers are starting to see that.
Right.
They're still out willing to buy. There's just not a lot of properties for sale, for the price range they want. The investors kind of gobbled those up.
Right.
So this is an education piece, and I encourage anybody to go to your loan officer, go to your realtor to really, for a starting point, saying, can I get it? What does a $900 payment look like?
Right.
What does $1,100 payment look like with moderate taxes? Meaning, what does the sales price look like?
Right.
Well, looking at Mercedes when we should be buying Toyotas, and that's not a bad thing. I'm just saying, once you look at a Mercedes, you don't want a Toyota.
Yeah, absolutely.
We'd rather start small and go to the more expensive because, wow, it's hard to look at more expensive properties and find out you can't afford it or qualify for it, and then start looking at the less priced ones, and there's just not as many amenities or features, and people get disappointed. So
Yeah.
delighted when they come, and the first thing they do is come to me to say, here's what I want, here's what our goals are. We discuss their goals, and then we can come to you so you can maximize your time and not waste any of it. And that's a really important thing to know is the market has changed enough where it's really important to make that step.
Right. Well, I thank you so much for all the information today, Patrick. I think that this is a very good educational kind of thing for, especially if you've not bought a house before or first-time home buyer. These are really, we're doing these to help you. Next week, I'm probably going to have to skip next week because I'll be flying back from Ohio because today is my little munchkin's first birthday.
Nice.
And so I'm going to Ohio this weekend, so I don't get back until Monday afternoon. So we'll pick it up the following week.
Hey, anytime. I'm glad you get to go out and do that trip. That's fine.
Okay, Patrick. Well, thank you so much, and you have a great afternoon.
All right, great. Thank you.
Okay, thank you, everybody. Bye-bye.
Bye.